Good morning, everyone. Welcome to our Friday webinar series. That's on a Wednesday. Folks, if you can hear me, let me see a show of hands. Just want to make sure that the volume is on. All right, perfect. Thank you, everyone. All right, Warren, glad to see you, my friend. All right, so just a little housekeeping rules. Again, Insurance Advisors Direct, welcome to our Friday webinar series that's on a Wednesday. Pretty much going forward, my annuity presentations will be given out on Wednesdays. So if you're not able to attend, or the folks that are not able to attend, this presentation will be on our YouTube page as well. So actually, this is pretty exciting because the month of April is CD renewal. I'll call it CD renewal month. April and October are the two biggest months for CD renewals. And if we all know that interest rates are almost at zero. So interest rates on a CD just doesn't compare to the interest rate on a MIGA. And we'll get to that later on in the presentation. So again, folks, welcome. Sit back. This is going to be a short and to the point presentation. So with that, we shall begin. All right, so as you know, IAD's mantra is simplifying your success. And we do that with our 7 pillars of success: our product offering, marketing and services, lead generation, technology, our sales tools, training and education, and of course, our administrative services. Right? And that is something that we are very proud of. All right, so what is a MIGA? A MIGA is a multi-year guaranteed annuity, and it's a fixed annuity, guaranteed interest rate for a set period of time. It can be anywhere from, depending on the carrier, 2, 3, 5, 7, 6, 9, 10 years. And they are typically funded with a single premium. And then your interest is credited to the account value until the end of that guarantee period. So what is the difference between other fixed interest type products? Well, actually there are a number of important differences between MIGAs and other fixed interest types of products. So various type of products, financial products may make sense for your needs or your client's needs. And this is not, this webinar is not intended to be a comprehensive comparison. And actually we'll have something a little down the road to talk about an annuity versus a CD. Just want folks to know that there is an alternative to a CD, or a CD and actually a money market account, which is a multi-year guarantee annuity, or actually any other fixed annuities. So what is the difference? Continue between interest types. So with the MIGA, this is an insurance product issued by an insurance carrier, as opposed to a CD, which is issued through a bank. Guarantees are backed by the financial strength and claims paying ability of the insuring company, with fixed indexed annuities or MIGAs or any other fixed annuity product. However, those premiums that you put in is guaranteed up to $250,000, backed by your state's, all states guarantee agency. So if a company falls under, you are guaranteed up to $250,000. So it's not FDIC insured as a CD or a money market account. And this is a long-term product used to build assets with guarantees. So here's just a little comparison of fixed annuities and CDs. Like I said, in another webinar, we'll go a little bit more in depth with the advantages and disadvantages of both the fixed index annuities and CDs. So can you make additional deposits with a CD? No. With a fixed annuity, yes, as long as it's a flexible plan. Now, is your interest compounded and reinvested automatically with no current income taxes? With the CD, no. With the CD, you're going to pay taxes every year. With an annuity, of course, those taxes are deferred. Can you begin receiving interest after 30 days? With the CD, no, you're going to have to wait till that time period is up. Now, with an annuity, yes, you can start receiving interest payments after 30 days, depending on the type of product and the carrier. Of course, now there may be restrictions with that. Like I said, we'll get into that a little bit later. Can you make penalty-free withdrawals? With a CD, no. With an annuity, yes. Generally, they are up to 10% of the amount of the annuity that you can take a penalty-free withdrawal. But there's still, little caveats with that as well. Is your account creditor protected? So with a CD, no. With an annuity, yes. So it is protected against creditors cannot come after your annuity. Now, is there automatic bypass of probate expenses and delays? With a CD, no, of course, it's going to have to go through probate. Now, with an annuity, it's just like a life product. You have your beneficiary, and it will, those beneficiaries will be the owners of or receive the proceeds of the funds of that annuity if the annuitant or owner passes away. Can you receive a guaranteed monthly lifetime income? With the CD, no, because it is a shortened period. It is for a certain period of time. And with an annuity, yes. I mean, even with MIGAs, some carriers do have it to where you can receive income from a MIGA, even though it is set for a period of time, or if it's 3 or 5 years, you can receive a lifetime income from that annuity. And then I'm going to have to reiterate, can you make additional deposits? And again, yes. I mean, yes, with an annuity, and no with a CD. And that annuity, as long as it's flexible premium plans, you can make additional deposits. So which option clearly gives you the more choice, the better choice? That would be an annuity. And like I said, especially in our interest rate environment today, where interest rates are at near zero. So who should buy a MIGA? Retirees over the age of 65 looking for safety and guarantees, owners of CDs and the money market accounts. Now we'll say CDs and money market accounts do have their place, and the MIGA or an annuity just may not be the best fit for a person. Like I say, those CDs, money markets, they are more readily available. This person just have to walk into a bank, and then usually that bank teller will ask them about CDs or a money market account. And then those who are looking for guaranteed rates of return for a specific period of time. Now, what's the advantages of a MIGA? MIGAs typically offer higher interest rates, rather other than a bank CD or a money market account. They are tax deferred. MIGAs can be purchased with non-qualified and qualified money. Non-qualified money is money after taxes. Qualified money is money before taxes. Your principal is guaranteed, as long as you don't make any withdrawals. Access to money with penalty-free withdrawals. Like I said, some carriers could be 5%, some could be 10% free withdrawals. It avoids probate. You have a guaranteed rate of return, and MIGAs actually are simple and easy to understand. It is what it is. It's just growth with just the interest rate. There is no crediting strategies, and once you sign up for this MIGA, whatever that interest rate is, you're going to have that interest rate throughout the term of the MIGA. So here are some current CD rates. TIAA CREF, we can see a 5-year CD is at 0.80%. Look at Discover's at 0.60. Consumers Credit Union is at 0.70. Alliant Credit Union 0.65%. And here, let's look at some MIGA rates here. So you can have a 10-year, and this is not all indicative of certain carriers. This is just a general overview of current MIGA rates. 10 years can be up to 3%. You can 5-year 2.7%. And I find this interesting. 7-year CD is at 2.9%. I will say Nassau Re, very good annuity carrier. They have a 7-year MIGA that is at 3.2%. So as we can see, that the MIGA interest rates are a lot higher than the CD interest rate. So I guess your clients just want to know which has the better growth potential and still with the same amount of safety. Definitely that MIGA. And then in this here's a snapshot of how MIGA grows, and this is just an old illustration with an old interest rate. So this is just a hypothetical growth here. So single premium person puts in, a 65-year-old person puts in $100,000. And the first year, you'll see, well, the interest rate is projected at 3.45%. And like I said, that's not a current interest rate, but at 66 with that $100,000, $103,450 is credited to that person's account. So, I mean, we can see how that grows for the 7 years. So that 3.45% is added on each year until the 7th year. And then what happens after that 7th year? Well, you have a couple of options for your annuity. So you'll have a 30 days. So after the 7-year period or whatever time period you have for your annuity, you have a 30-day window to decide what you want to do with that money. So what you can do, you can continue for another period. You can still continue for another 7-year period. 9 times out of 10, you will keep that same interest rate, but on illustrated purposes, they'll always have 1%. But like I say, 9 times out of 10, you don't tell your clients that though, but 9 times out of 10, you'll keep that same interest rate if interest rates hasn't changed. You can choose a new period with a different duration. You may withdraw all or a portion of that account. And lastly, if you do not let the insurance carrier know what you want to do, they're going to automatically renew that after the 30-day period for that 7-year period or whatever that period is for. All right, so annuities can be complicated and difficult to present to your clients, but I tell you folks this, a lot of you all are Medicare agents, and Medicare products are by far more complicated than annuities. So if you got the hang of Medicare, just knowing the annuities is a lot simpler, and especially with the MIGA. MIGAs are simple, easy to understand, and straightforward. It's just a straight guaranteed interest rate for a select period of time. So your clients who are looking for simple retirement solutions and your agents who want to offer annuities but are hesitant due to the complexity, MIGAs are your best answers, my friends. So yeah, like I say, it is straightforward. Just interest rate, accumulated, guaranteed interest rate accumulated every year until the end of that time period. And folks are looking for that, especially if they have a CD. And I say, me personally, if like my father has a CD, and the old school guys, well, I don't like annuities and blah blah blah, but you have this CD that is at a 0.55%, and we can get you into an annuity that's going to give you at least 2.75% for the same time frame. Like, which one would you rather do? So, finally got them to go ahead and do that. But yeah, it's just a matter of us, the agent, understanding of what a MIGA is, what an annuity is, and presenting that to our clients. And that's what IED is here for. That's what we're here for. That's what I'm here for, to help you simplify that process and get you going, because there is a huge need. And I say, especially with the Medicare agents who have that book of business, I urge you to go into your book of business, look at your clients that may have CDs, that are looking for safety, looking for guarantees, want a higher interest rate. My friends, you will have an excellent bottom line at the end of 2021. All right, so just a few carriers. Now we'll say the ones that have the better rates for MIGAs, definitely Oxford and Nassau Re. So those two, I would recommend that you get appointed with us to offer those MIGAs. All right, and then actually we have a couple of fact finder, couple of tools that will help you find out more about your client and what they have. This little annuity fact finder is a CD questionnaire that you can give your clients. It'll let you know when they started their CD, when the CD matures, the interest rate, the length of the CD, penalty for withdrawal. And I will say this: if your client does have a CD and it's not up for renewal, and they want to think about getting an annuity, well, I'll tell you, this little penalty is it does not compare to what the growth they will see from a MIGA or even a fixed index annuity with the bonus. The penalty is actually pennies on the dollar for a CD, and then they could make that up if they decide if they want to do a fixed indexed annuity. The bonus will cover 2 or 3 times whatever that penalty was. So it makes sense. We just have to understand the ins and outs. And like I said, that's what I'm here for, to help you do that. And these fact finders will help you gather that information to go and forward. And then we also have a more in-depth client confidential form, where actually you will gather a lot more detailed information. And that one actually can be used for a number of things, life insurance, annuities, as well as even Medicare. And just gives you a better snapshot of your client. All right, and that is the other part of the form. Well, folks, that's all I have today. If you have any questions, type them in or give me a call. And yes, sir, Warren, let's see what you have. What question do you have, my friend? Just type that in and I'll be glad to answer that. All right, well, what I'll do, when I'll give you a call after this, and so if you're not able to type your question in, then I'll be glad to answer that. Folks, you will receive copies of those annuity tools, as well as a phone call from me. So Folks, you have a great rest of your week. And if you do think of a question, just email it to me. Here's my information there. And we will be glad to, let's see what we got here. Okay, so how many carriers of MIGAs does IAD work with? Actually, all of our annuity carriers do have MIGAs. The ones that I mentioned, Oxford and SRE, have the better interest rates. And do we have ads slick for advertising? Yes, we do. We can make those up, make them customizable for you. Let's see if somebody said, what are the commissions paid on MIGAs? Now, unfortunately, MIGAs aren't, commissions aren't as high on MIGAs as a fixed index annuity, but some are going at over 2 to 3%. All right, and yep, so I hope that answered your question. So folks, feel free to call me anytime, and we will be glad to answer those questions for you. All right, folks, have a good rest of your week, good rest of your day, and take care. All right, bye.